Okay, let's unpack this. Today, we're doing a deep dive into the dynamic world of electric vehicle manufacturing. We're focusing specifically on a company often hailed as, the next Tesla Rivian. You've given us some really excellent source material here. And our mission today is to explore their journey, try and understand the strategic thinking behind it.
Right. And what's particularly compelling in this material, I think, is how Rivian appears to be adapting a strikingly similar strategic playbook to the one Tesla used.
Ah, the Tesla playbook.
Exactly. It's really about charting a path towards sustainable success in what is, let's face it, an incredibly competitive and capital-intensive market.
Okay. And our sources, they really seem to illuminate the strategic calls, the financial realities, and these critical turning points ahead for Rivian, all viewed, as you said, through that lens of Tesla's own rise. So here's where it gets really interesting, according to our sources. Tesla's initial market entry, they made a very deliberate decision right at the start. Go high-end first. Think of that original, high-performance electric sports car they launched.
Mm-hmm. And this brings up a crucial strategic point. Why start at the top? Why the expensive car first?
Good question.
Well, Tesla did this, it seems, to definitively prove that electric vehicles were desirable, that they were a viable product customers genuinely wanted. It was a direct challenge to the traditional automakers who had, frankly, largely dismissed EVs back then.
Okay, so prove the concept first.
Precisely. Once that initial concept was validated, Tesla then systematically expanded. They moved into more accessible sedans, appealing beyond just the early adopters, before ultimately moving into lower-cost mass-market models. And that's what dramatically boosted sales volumes and, crucially, improved their overall profitability.
Right. So the crucial takeaway from Tesla's journey here, as our sources kind of simplify it, they essentially started by building demand, proving the tech with, rich customers, then progressively moved down market to build a sustainably profitable business.
Yeah, and that allowed them to transition from years of, significant operating losses, the red ink stage.
Lots of red ink.
To their current, really quite impressive, 17.66% gross margin. And that staggering, $1.1 trillion market cap?
Wow. Okay.
So if we look at Rivian Automotive through this same strategic framework, they're clearly in that earlier stage, that phase of substantial operating losses. Their gross margin is currently negative 15.9%. with about a $16 billion market cap.
Much smaller, still losing money per car overall, in a sense.
Overall, yes.
Yeah.
But their ambition is undeniably Tesla-like. And the parallels in their strategic approach, they're quite striking when you dig into the sources.
Okay, so like Tesla's sports car, Rivian also had its critical proof-of-concept vehicles. Our sources point to those commercial delivery vans.
The Amazon vans.
Right. They were instrumental, it seems, in both developing their underlying tech and generating crucial early revenue. That Amazon partnership was key. And then, in parallel, they were also developing and launching their own premium, high-end consumer pickup trucks, the R1T and R1S.
And it's incredibly insightful to see how Rivian has managed this. They've not only ramped up production, but also fine-tuned their manufacturing processes along the way. What really stands out in this analysis is that they managed to achieve a modest gross profit in Q4 of 2024 and Q1 of 2025.
Okay, so gross profit positive for those quarters. What does that actually mean?
Well, it signifies a major operational milestone. It means they stopped losing money on every truck sold during that period. Now, the company as a whole is still experiencing overall operating losses, right? Because of heavy investments in R&D, selling general administrative expenses, SG&A costs.
Got it. Still burning cash overall.
Still burning cash, yes.
Yeah.
But achieving gross profit, even briefly, is a powerful validation of their efficiency gains. It shows the manufacturing is getting dialed in.
Okay. Now let's unpack Rivian's next pivotal move then. Our sources clearly identify scale as the absolute key to their future.
Scale, scale, scale.
And Rivian is preparing for its significant mass market pivot. The next major vehicle release is the R2. That's a lower cost SUV, right? Specifically designed for a broader consumer market with a target to begin production first half of 2026.
That's the plan. First half of 2026. And this, naturally, brings an important question to mind. Can they actually execute this shift? Mass production is notoriously difficult.
Yeah, can they pull it off?
Well, look into the numbers. With approximately $7 billion in cash on their balance sheet, plus that key strategic partnership with the automotive giant Volkswagen, our sources seem to indicate it seems, quote, highly probable that Rivian will successfully get that factory up and running for the R2.
Highly probable. Okay, that sounds pretty optimistic given the challenges.
It does, but the VW deal certainly helps de-risk it somewhat.
Right. So the strategic implication of all this is clear then. The real test for Rivian, our sources emphasize, it comes when they actually start selling the R2. If those sales prove robust, that significant increase in volume should be the catalyst, the thing that propels them towards sustainable profitability, mirroring that Tesla trajectory.
Exactly. That's the hope. And what's compelling to observe here, is that no company will ever truly be Tesla again.
Right. First mover advantage is huge.
It is. Tesla essentially carved out and defined the modern EV space itself. However, Rivian's R2, if successful, it could position it as perhaps the next best thing in terms of market impact and disruptive potential.
The next best thing. Still a big bet, though.
Oh, absolutely. It remains a high-risk investment. Scaling automotive production is incredibly capital-intensive and complex, but the company is described in our sources as executing well on its strategic objectives so far.
Okay, so to recap for everyone listening, you've just heard how Rivian is, well, strategically mirroring Tesla's initial path. It's quite remarkable, starting with those niche, high-end vehicles to validate the concept, refine the technology, and now aiming for mass-market scale with the R2 to achieve sustainable profitability. It's a really compelling blueprint for a disruptive company, isn't it?
It really is. And thinking about the broader implications here, this deep dive powerfully illustrates how a successful strategy from one industry pioneer can effectively become a foundational blueprint for others. It kind of prompts us to consider, doesn't it? What other industries might see similar playbooks emerge from their own disruptors? And perhaps more interestingly, what unique challenges or maybe novel opportunities might arise when you try adapting those blueprints to completely new market conditions or different technological waves? Makes you think.